Recording in progress.
Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, May 16th, 2023. I'm going to begin with the S&P 500 as it continues to be the problem child in terms of indexes and what its intent are and what actually the count is. As the NASDAQ went up and again reached resistance levels up above 13,555, the S&P could not even get up above 4155. And it was an interesting day. We had a couple of really great sell-offs. So that part all worked. They bought it back, they dropped it off, they bought it back, all into the close. So again, what continues to be in control here for the S&P, and I know many of you just don't like me talking about it, but it's the zero DTE options, because that is what is trading. And that is where a lot of, day traders or just institutional traders are just going there because they can make their money. It is trading, it is moving, and it is providing opportunity to put on positions that they can adjust and trade during the day. It all settles out to cash at the end of the night or the end of the session. Bing, good day. Meanwhile, we continue to wrestle with what is going on with the market. What are the intentions of the market? And while it continues to basically form a very strange triangle pattern of what is now what I'm basically questioning. Even if I want to call this minute 1 of minor 5, and all of this is minute 2 of minor 5, we need to get ourselves down below 4,100 to put in a solid low to launch higher within a third wave of a minor 5th wave, if that indeed what it is. But right now, what I really want to do is, because a subscriber on to the channel brought it up and asked me if it could possibly be, but they were saying it right now, it's their alternate count. And I honestly had to answer them and say, yeah, it is my alternate count as well. And I kind of hinted at this probably on Saturday during the big picture update, that this still counts primarily best as 5 off of that low to here. Now, if I back this all up, I'm going to be honest with you, and I'll just put it into on a closed basis, which does make it just a little bit cleaner, just a little bit cleaner. But if I kind of can go 1, 2, and I can count this as the 3 down to here, 4 and a 5. Even if I keep it in a candlestick pattern, it still could be 1, 2, 3, 4, 5. So it still can count as 5. It's not optimal. It's not pretty. It's not, beautifully formed, et cetera, et cetera. But it does. And that would then suggest, and I'll go out to the 4-hour chart, that would then suggest that this 3 comes over to here, the 4 comes over to here, and the wave 5 goes here. Now, before you climb on to me about this, again, I'm going to tell you, take it down to the line chart, and it's clean as clean can be. So it's 1, 2, 3, 4, 5, and this then turns into 1. And let me just see if I can open this up and you'll see it again. 1, 2, 3, 4, 5, and actually you could time it out, and wave 3 could be the longest, or wave 1 can be the longest, but wave 5 is the shortest out of 1, 3, 5. So no matter what, I cannot break any rules, and it can work out to be a 1. And then this all can still be a part of a very bizarre second wave. Or just, I'm not, you see, where I'm really getting caught up in, I'll show you. Whether I make this the 5 and then I put all the balance above it and make this a 1, this is a difficult, what the heck is going on here? Because what I could possibly come up with is like, oh, this is a 5, but I can likely work it out to be an A, B, and a C. But it does work out to be a clean 5. You can do both. But this is the difficulty right now with Elliott and producing this count. And I suggest it's like I'm trying to look at it many different ways, and which is why I'm basically sticking with the count that I'm leaving as my preferred and giving absolute, the last part of what I could give to the S&P to get up and to get going and to get up at least above 4206, if not up towards that 4250 area. But you can see how difficult the market is now getting. So if this indeed is now forming some kind of a triangle, and into what position, I'm not sure. The only thing I can come up with is this is A, this is a B, and then we're just doing the balance in a very bizarre triangle pattern to finish wave 4. And it's something I've not seen before. It's something that I've not dealt with before. But I'm trying to go through all of the tools in the tool chest to determine what is this market doing here. Because even if I drew it from here, you can see that it is coming down and putting in this very strange, okay, you didn't like that, did you? All right, let's try it again. That's not where I want it. I want it there. All right, so we got that. And this is going to have to come in flat. So we're going to go there, but we get this little bit of an angle here. So is this the triangle in here? It's very strange, but it is a declining triangle pattern, which would suggest we get down and then launch. But triangle of what? I've yet to really see a triangle pattern in a wave 2 position. So, that one doesn't work. But I'm not sure. I'm not sure what to call it. But I can tell you this is what I'm looking at. So I have to allow the market to just continue to work itself out here and say that here's what I have to leave open. Until 4060 is broken, we're leaving open the potential that the market somehow is going to catch fire and rally up into our resistance zones, which suggest 4250 or above. Remember these insides. These insides are where 5 would equal, minor wave 5 would equal minor wave 1 at 4262. Minor wave 5 would not equal much anything here. But we know it can get Fibonacci-wise above 4206, or at least equal 42.6 with this reading. Minor wave 5 would equal 0.618 of minor 1 at 4185, which it still can't get to, but it would not be successful in terms it would be a failure even of within this hole. So it would be even a stronger failure. Even if I move this over and put the 4 over and put the 5 here, it's still a fairly strong failure in terms of where wave A is. And we're looking for this intermediate C wave. Now, intermediate wave C is here, where intermediate wave C would equal intermediate wave A, and that's way up here at 4506. Now, you still got people that are going to say, yeah, that's where the market's going. It's like, really? What's it going to do to get there? Now, here's what we can possibly lay as the underpinning of giving this market a boost and then dying? Bringing it back down. I'm going to just leave it here on the 4-hour chart for a second. Miraculously, between now and Friday, they come to an agreement on the debt ceiling. That's what's holding everything back. That's what's keeping the bond under pressure. That's what's keeping everything like, oh, what are we really doing here? How should we be positioning, et cetera, et cetera? Should we plan for the end of the world, or do we rejoice in being saved once again, and the Fed's going to have to cut? Okay. If it should, by some, I don't know what to call it, they do reach an agreement between the House and the Senate passes it, and the president signs it into law, then bing, we're likely going to get one humdinger of a rally off of the news. And it makes sense, doesn't it? Look how this spring is winding. Ding, 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 ding. And we're giving the opportunity to every big trading firm and all these other traders that trade 0 DTE options to rake in tons of money and just play with the market and keep it right between 4,100 and 4,150 to 60. And it's been doing that, well, May 10th for that matter, May 1st, if we take it up a notch to 4,200, down to 4,060, I think that being the range, and now it's doing even tighter ranges, and now it's even tighter within the tighter. Spring is being wound, the spring is being wound, the spring is being wound so tight that no matter what happens off of this, it's going to let go. Right now, though, I'd have to be honest, even if you're working a triangle pattern, it does suggest that it's going to touch 4,100 or touch just below, spring breaking, boom, all that energy goes, and it'll thrust higher. I just can't tell you what's going to make that happen outside of an agreement on the debt ceiling conversation. So I don't see any particular economic numbers that are coming out the balance of this week that are going to really put us into high gear. I mean, tomorrow we got housing starts and building permits, whip-dee. Then we have on Thursday the Philly Fed factory survey, which, is supposed to decline yet again. And the other ones, the Empire State, didn't come out very well. So if we're looking for the spring to break and drive the market lower, would that be one? I could get it. Initial jobless claims could do it again. And then we have existing home sales and U.S. leading economic indicators on Thursday. Friday, we got nothing. But guess what? At 11 a.m. Eastern on Friday, we had Fed Chairman Powell and former Fed Chairman Bernanke talking on some kind of a panel somewhere. I mean, the Fed's got all these speaking engagements this week that are giving me a chuckle. And I'm like, well, what are you guys doing besides not solving these problems? In any case, it's very difficult right now. Even so much so that trading, you kind of have to hang and you got to take your chances and you got to take the moves. But when they do show up, I'll just show you. We'll drop down to a 5-minute, to a 5-minute chart. I mean, they do show up. But look at this one on a 5-minute. It did. You dropped and you ran. But if I even open this guy up, look at that. Right into the close. Look at that decline into the close. But you have to be able to trade into the clues. They drove it down. They hit all the stops. And they just brought it back up. So it's been quite interesting. I can open this up even more. And we can see great trades. Nice run. Re-answer. Nice run. Ding, 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 ding. Drop it. So, but you got to wait for them. And then you have to participate. So it's not been the easiest market to trade. And here we sit, 40.25. So again, I'm leaving it all open, as you can see, as to labeling. The market truly needs to clean itself up. And I am saying what my alternate count is, and that is that that completed it right there, and that completed the primary B. So I'm thinking that would be the point. We did the minor 5, the intermediate wave C, the primary wave B, all right here, and we've started in that primary C wave. It truly, what makes it more difficult is that we're hanging out in a wave 2, but still, actually, in terms of waiting for whatever it's waiting for, it does, that part fits. But I'll tell you what direction that spring's going to spring. If it is 1, 2, it's going to drop like a stone. A big boulder being dropped into the ocean right off an abyss. And it's just going to keep going and keep going and keep going. That would have to be my take, if indeed the alternate springs forward and decides to be the preferred. But the market's going to tell us that. And unfortunately, it's going to come on something that we're not going to like, in terms of, it's going to happen fast. Something's going to trigger it. And the only thing that I can think right now, that's big enough to do that is the debt ceiling. The only other thing, and it's in the back of my mind, and I don't really like talking about it, is the fact that something really ugly can happen in the Ukraine and Russia conflict. So, stranger things. So that's the S&P. And you can see on this chart, everything, the 50 and the 20, look how flat they've been. They've been flat since the 1st of May, or the 10th, actually. Flat all the way, and they keep getting flatter. A little tiny turn where the 50s finally crossed back over the 200 today, but it could take it back. Over in the NASDAQ, you want the opposite? The NASDAQ ran to another new high for this particular sequence, ran itself up to the next resistance zone at 13,550. Getting as high as, that's 47, I thought we got pretty dang close, 54, 13,554.50. So it exceeded it by a little bit, likely just kind of going up and hitting some of those stops. And then the market rejected the move. And it dropped 60 points. And we're going to sit and hug some very high level resistance / support at about the 13,500 level. So is it done? 1, 2, 1, 2, 3, 4, 5, 3. I don't know. 4, 5. Could. It's not real pretty. I don't like the way it looks. So, we're just kind of in this. There we go. 1, 2, ding, ding, ding. 3, 4. We got one more. That could be possible. And then it cleans it up a little bit, right? 1, A, B, C. 1, 2, A, B, C, 3, 4, 5. Or A, B, C, and a 5. So even they're both being a kind of cagey, but the NASDAQ's up there putting in the new highs. The NASDAQ is continuing and still is showing that it has more capability of continuing to move itself higher, whether or not, just an advance. So again, we're just seeing a lot of what I would say asset managers coming in and adjusting and just reallocating money from one spot to the next. trying to interpret what possibly could happen and what would the consequences be and how will their portfolios look. So that's what we saw again today. And basically Apple, AMD, Amazon, Google, Microsoft caught a bid today. I think even Tesla caught a bid today. Yeah, not by much. It came back down. But you can see here in the after hours, they're bidding it right up. Bid it right up. Of course. So we continue to see that, and I'm going to leave still additional room in the NASDAQ. That's our next one. If we had to say, I likely could, let me just see. 1, 2. 1, 2. Yeah, I could. It just is very, very difficult right now. But I would imagine I have some resistance points coming up in there. Even if I have to, nope, wrong. Even if I have to come in and do something like this. Here, so we got those. And we're now at 51. Then we have 67, 78, 3605, 13,605. And yeah. So we have them, and they're fibs. These are all just fibs. I'm connecting points that would show continued rally. We'll see how this all finishes. We'll see how this all counts out. But right now, it's not easy. There's so many things stacked against this market moving to the upside, but yet it does. And the other one can't. And the Dow can't. Look at where the Dow finished down 336. The Russell catching a bid after hours, catching a bid now. But during the day, it was really being sold. So not an easy market right now. So for tomorrow, like I said, we have housing starts and building permits, and that's it. That is it. We don't even have any Fed governors. They're taking the day off tomorrow. So the market's going to be left up to its own devices for tomorrow. And that's where I'm going to end it for today. The next update will be on Wednesday, the 17th.